So today's been a pretty good day in the stock market. If we look at the Dow, it's up 1%, the S&P is up 1.7%, and the Nasdaq is up 2.5%. I think the market was slightly higher during the middle of the day, but it has pulled back slightly, but even with a little bit of a pullback, still a pretty good day in the markets. Today, we've got a few things to talk about. We've got a couple of macro environments things to talk about, and then we've got a couple of stocks. So for you guys that like a couple of stocks in one video, today's one of those videos for you. So we've got a stock that have completely got things wrong and it's not looking good for them. We've got Tesla's earnings. We'll spend a few minutes talking about Tesla's earnings, and we've got to talk about Enphase, and then we'll talk about one of my favorite UK stocks that also reported earnings today as well. So from a macro point of view, obviously the market's having a good day, and that is off the macro news that is out there. Trump did come out with, I think it was a tweet. If not, it was on his political platform that he has, saying that tariffs will come down substantially on China. Obviously, that is going to happen. I think that if you think that isn't going to happen, I don't know what to say. Like, they will go down at some point. We just don't know whether it's going to be tomorrow, next week, month's time, 3 months' time, and how long they sustain for, how much damage they will cause. That's what we don't know. But everyone kind of knows these aren't sustainably going to be on here for the longer term when we got past, like, I would say 12 months, because they'll just cause too much damage. I think everybody knows that. I think even Trump knows that. So we know they are going to come off, and obviously maybe the market kind of took that as a hint of that, well, if he's saying it, that's going to be sometime soon, as in this week, maybe not, 2-3 months down the line. So we'll see what happens there. There was also a bit of a reach. I don't know if I've got it actually down here, but also he's been having a few goes at Jerome Powell over the last couple of days, especially Monday, I think it was as well, saying about sacking Jerome Powell, and then he came out and said, I'm not sacking Jerome Powell. So not the first time that we've seen Trump say something and then go back on what he has said very quickly. But yeah, I mean, it's obviously the reason why, once again, he's not going to sack him. The reason why is he's putting pressure on Jerome Powell to cut interest rates. And if he cuts interest rates, obviously that would be good for the economy. And if he has a good economy, good stock market, looks good on him. That's the reason why he's obviously doing it. And I do think it's a point. I've said before multiple times that Jerome Powell, in my opinion, has been a very poor Fed chairman. I think he did a poor job in 2020. I think he was... there was no need to cut interest rates because the economy was actually doing okay considering what was going on. There was no need to do the big stimulus checks. I think we had a stimulus check in like the middle of 2021, and by then the world was kind of going back to normal. Everybody was actually had more money than ever because people weren't going out as much or going on the big holidays, so they had even more disposable income to go spend on things as well. And they weren't spending it on holidays; they were spending it on other items. So there was no need for it, and it absolutely killed the economy really through 2021. There was that kind of big bubble in 2021, and then there was the big come down in 2022. So the Fed chairman messed up 2020. He messed up 2022 when the inflation started coming up, and it took until inflation to 8% until he started putting up interest rates, and it was way too slow to react to it. And then obviously we had the current situation in 2025, where should it be cutting? In my opinion, yeah, even before the tariff news came in, and maybe concerns that inflation goes up a little bit, you got to react off the information that's in front of you. And right now, the information in front of you is that inflation isn't going up that much with the tariff situation, but the economy has slowed down dramatically in the last year. And you've got to be looking at like the EU, for example. The EU have done, I think, 3 interest rate cuts so far this year, but yet the US hasn't done one since 2024. Why is that? That doesn't make sense. So I do think he has a point, because I do think Jerome Powell has been a very poor Fed chairman. The other news is that Vladimir Putin has potentially offered to halt Ukraine invasion along current front lines. Once again, this is another guy out there that says one thing and does the other one. I think there was rumors of like an Easter truce that was going on, and then I think he ended up bombing somewhere else in Ukraine, even when he said there was going to be a truce. So yeah, I'd take this with a pinch of salt, but if there was to be a deal in the current Russia-Ukraine situation, obviously that would be good for the world, good for the economy, and obviously the good for the people for Russia and Ukraine, because obviously the thousands of people that have already died during this battle, no one's a winner in wars, and that is obviously would be something great if that was to come to some sort of point where thousands of people weren't getting killed. Anyway, let's get on to some sort of stock news here. So first one, Argentex, maybe one that a lot of you guys haven't heard of, but I wanted to really quickly point it out for just quick learning lessons here. So Argentex is not a stock I invested in. I know a few people that did invest into it. I think even Paul Hill at Vox Markets, I believe it's a position of his. Yeah, a stock that actually, speaking of 2022, actually did really well during that period of time because of the FX impacts that were going on around the world. The dollar went really strong, and they were a company that really benefited from it. Since that time frame, yeah, it hasn't really done that well actually. If you look over the last time period, but it was recently having a little bit of a bounce. However, what came out was very surprising. This may be not the best article that could have shown what's going on here, but they have come with emergency talks for a sale. Basically, that if I just have to pop back here, they have been actually forced to suspend trading, and currently they actually have a liquidity concern going on at the moment. Basically, yeah, they haven't got enough liquidity going in, and they are suffering from the current environment, which for a company that focuses on FX, right now, this probably should be a time where there's a lot of FX impacts going on, especially when you look at the dollar at the moment. You would expect a company like this to actually be really benefiting from this situation, but the fact that they are actually struggling is surprising, and the fact that they now have a liquidity issue where they have to go for an emergency sale is crazy. You know, it's one of those that you would expect a company that is of this sort of basic or standard to have the basic handling of this. This is very important. Sometimes it goes back to the point of view that, you know, sometimes you think nothing could go wrong with a business. You can be sure it works out, and then something like this happens. You think, whoa, where has that come from? And that's something you always got to be careful of. This is what I always say. Like, you can always think that something's going on. You know, your company's absolutely amazing, it's doing fine, and out of nowhere, bombshell hits it, and then all of a sudden you're like, whoa, you know, auditors didn't sign their accounts off, or something on them sort of lines, liquidity issue out of nowhere. You know, there's, you know, where's that kind of come from? It can shock you, and that's why you've always got to be careful. That's why I always say, like, even my most bullish stock, where I'm always like, yeah, I can only see this working out, I never go for a big big allocation to just well more than 10% really, just because if something was to go wrong, you know, it massively sting you, and that is the story of Argentex at the moment, and what has happened over there at the moment. Moving on to Tesla. So Tesla somehow, no idea how, but somehow is up 6% today. No idea how, because actually it's up 7%. It's just updated. Because when you look at the recent financials that came out last night, my days, they were bad. You know, the last financials of Tesla have been horrible. This one is by far the worst I've actually seen them ever do. And I knew it was going to be bad. Like on the video on Monday, I said, like, this is going to be a bad quarter for Tesla. You know, you only have to look at those delivery numbers to think that these are going to be bad numbers. And the other thing is that you were looking at the analyst targets and you're going, there's no way they're hitting these analyst targets. No way they're hitting these analyst targets if deliveries are down 13%. You know, they were expecting like 2% growth or something. And I said it on Monday's video. I said, no chance they're hitting these numbers. And there you go. No chance. You know, I think on the EPS side of it, I said there's no chance they're hitting these EPS numbers because they would have to put the prices up massively to justify the getting this EPS, and they haven't done that. And I knew it was going to be a miss. I was expecting like a 10% miss on EPS. The EPS missed by like 30%. Massive. Imagine a company missing the EPS by 30%. That's massive. Absolutely massive. Revenue as well, down 9.2%. And this is a company trading at 94 forward times earnings, because they're missing EPS this much. They're not even at 94 times forward earnings. At this sort of rate, the company's going to be trading at like 500 times earnings. Absolutely horrible earnings. And the fact the stock is up is absolutely bonkers. And it gets worse from there. When you actually start digging into the numbers as well, it gets worse in the numbers. So if you look at an automotive revenues, the car sales, you know, it's a car company at the end of the day. You know, I know people like to say it's this and this and this. Most of the revenue still comes from cars, so it is a car company at the moment, and that was down 20%. Now, you could point to the green shoots being the energy storage, but the problem is like, yeah, it grew 76%. But if you look at this, if you look at Q1, that's a relatively low number. You know, Q2, it stayed about 3 billion, 2.3 billion, 3 billion. This quarter, 2.7 billion. So apart from Q1 last year, for the last 3 quarters now, there's been no growth there. And in fact, it's actually going downwards. So when we get into Q2 2025, and they're actually going against this 3 billion comp, this growth is actually not going to be positive. It could actually be negative. That's been one of the green shoots for the business. But even that's stalled now. Service and other revenue was up 15%. Yeah, it was okay. But same again. You look at that, 2.2. 2.6, 2.7, 2.8, 2.6. That's actually declining quarter over quarter. That's concerning. Why are people not getting their services and other revenue anymore? That's not good. Gross profit down 15%, more than your revenue. That's one thing you never want to see in a business is gross profit going down more than your revenue. That means you're selling less, but you're also having to sell them at cheaper rates, which ain't great. Another thing you don't want to see, operating expenses going up when you're losing revenue and profit. That's going to eat into your profit margins as well. Not great. This is the worst number of them all. EPS down 71%. 71%. For a company trading at 94 times earnings. Wow. This is what I mean by, I knew it was going to be bad. I never thought it was going to be this bad. I've never seen a quarter like this before. This is a big issue. Really, really bad issue that's going on with Tesla. And, people think I'm a Tesla hater. I'm not. Tesla's made me really good money over the years. I've overall, my money is 10x in Tesla. I've made so much good money from it. I'm not a hater. But I just don't know how you can look at those earnings and think everything's okay here. And even the people that are investing for the future here, and they're going, oh, but the future, full self-driving, robots. Yeah, that's great. That's absolutely great. And it's, that's worth something. But the problem is that you got to look at, that would be great if it happens, but you got to look at what they're doing right now. You got to look at what's in sight. And people say, well, that's in the future, but it's not even in the future in the next 12 months. You got to look at what's going on right now and what's in the future that you can actually see coming in. When we start seeing full self-driving coming in, then you can start pricing up, what the ramp is going to be. But until that point, we don't even have it yet, so you can't price it in. And when you start looking at the moment, this company is in big issues, and they need something to save this business. But the problem is this thing that's going to come and save them? Is this coming anytime soon? Because if it's not coming anytime soon, at what point do we actually start looking at Tesla and going, this is a big problem? Because when they did bad financials in 2023, a lot of people said, oh, it'll be all right because next year they'll be out of this situation. And it got worse. People said in 2024, don't worry, by 2025, we'll be out of this situation. But it's got worse. And we're in 2025 now. And next thing I'm hearing now is, don't worry, by 2026, we'll be out of this situation. How long do we keep going until eventually we go, hold on, these financials are awful for a company trading at 94 times earnings. We have to actually start valuing it off a car company here. And maybe it's a car company with a slight premium because of the future they have. But right now, there's more than just a slight future priced in here. I mean, it has to save the business. That's the issue that you have with the valuation at your moment, because it's falling apart. It's falling apart dramatically. And I'd like to own Tesla. Don't get me wrong, I'd like to own Tesla. But the issue is that I look at where Tesla's valued at right now for the financials, and I've got to value it slightly off the current financials. And even if the share price was to fall in half, like $125, I don't even know if I could buy it at $125, which shows you that it's priced a lot in here, which is the big issue that you have with it. Now, what I said would happen is, obviously, the stock is up on Power Financials. And I think I said to you guys, it'll go up somehow. Elon Musk will protect the share price. That's what he does. And maybe it's good timing from his mate Trump has maybe saved him. But obviously, the big thing that he kind of came out with, that he's going to step away from his role with, or his political role that he's kind of got going on at the moment, with Doge at the moment. And, maybe people think, oh, well, he'll go back to focusing on the business, and the business will start going up in the right direction if he starts doing that. That was his latest tactic to kind of go, don't worry about the share price, this is what's going to happen now. But, I'd start judging off what's actually going off right now. I thought by this time, we're supposed to have this cheaper model coming in. We're supposed to have the Cybertruck that was going to save the business. Where's that gone? The semi-truck, where's that gone? It's an absolute mess over there at the moment. Anyway, moving on to one that I own though, Enphase Energy. This is down 14% today. I tell you what, 15% now. If you showed me the financials from Enphase Energy and asked me what they were down, or if you showed me the financials that Enphase did and asked me to and you showed me the financials that Tesla did, and you said, okay, which one's going to be down more, or which one's down 15%, and which one's up 7%? I would have said Tesla's down 15%, and Enphase is up 7%, but it's not. It's the other way around, down 15%. I bought today. I thought the drop was ridiculous, and I'm buying. I've not gone through the full earnings. I'm going to do a full earnings review of all the companies report this week, Tesla and Enphase, and I'm going to go through them on Patreon, and I'm going to go through the conference call. I've not gone through the conference call yet, but what I've obviously been at work all day, and from what I've been able to scan in between and what's kind of come out, is that, yeah, I thought they were okay. Don't get me wrong, they could have been better. That's not me coming out and saying that they're 10 out of 10, and obviously be aware that, obviously I'm a shareholder, so maybe there's a bit of a biasy hat going on there, but honestly, yeah, I thought they were okay. In fact, I thought they were good. I didn't think they were excellent. Yeah, don't get me wrong, not 10 out of 10, but I'd say it's only 7 out of 10, 7.5 out of 10. I'd go as far as that, good. It was good. Room for improvement, but good. When I look at Enphase, the numbers they came out with was a slight EPS miss. Okay, yeah, obviously, slight EPS miss is obviously not great, but it's not a 33% miss like Tesla. Okay, revenue was up 35% year over year. Yeah, granted, it was a 4 million miss. Obviously not ideal, but when you look at the context of these numbers, analysts, they missed the analyst numbers. When you actually look at the core numbers here, revenue up 35%. That's all moving in the right direction. Gross margins went from 43% up to 47%. A 4% expansion in the gross margins. That's excellent. You look at operating income, went from a loss of 29 million up to a profit of 31 million. That's good from my point of view. If you look at the EPS, it went from a loss of 0.12 up to 0.23 on a basic EPS point of view. Yeah, can't complain. All the metrics are moving in the right direction. If all the financials move up in the right direction, you're going to get rewarded on the share price, 100%. And that's what's happening there. All the financials are moving up in the right direction. If they keep moving at this pace, yeah, this stock will do well. And ultimately, you got to look at what it's valued at. When I'm looking at Enphase, when I'm looking at a company that just grew revenue at 35%, when I look at a company that just grew EPS by double, I'm picking it up at 16 times forward earnings. That's exceptional for a company at that sort of valuation. So, yeah, I look at point of view analyst numbers were slight miss. Yeah, could have been better. But if you actually look at the fundamentals, they're all moving up in the right direction dramatically for a 16 times forward earnings business. And that's more important to me. And my other argument would be, they missed analyst numbers. Okay, but did analysts get it wrong? That's the other thing. Did analysts just guide wrong for the business? Because that happens. Let's go back 3 months. I know a lot of people's memories, even though they're supposed to be long-term investors or claim to be long-term investors, suddenly all short-term investors in earnings, right? If we go back to 3 months on the last quarter of Enphase's earnings, what did the EPS do? The EPS beat by 0.19. They beat by 20% on the EPS, right? Revenue last quarter beat by 5 million, the opposite side of what they've just missed by, okay? So they smashed analyst numbers on the last quarter. Do you know how the stock was rewarded from the current share price, or where the share price was when they reported those numbers? It went down. They reported those earnings at $63, and before we had the report of the latest earnings, the stock was down $53. So the stock fell 20% on last quarter's earnings, where they did the opposite, and they beat by even more amounts on the EPS, and they beat more on the revenue point of view. And they also hiked up the guidance. They hiked up the guidance as well. So what in the short term, what do analyst numbers mean? Because when they beat them, sometimes it doesn't mean anything in the short term. In the long term, when in the short term when they miss them, it doesn't mean anything. I just look at the long term graph, and if the long term graph keeps putting the financials up in the right direction, that's more important to me. Because as you can see, analyst numbers really don't mean anything. For me, I zoom out, and I looked at this quarter from Enphase, and I see the numbers ticking up. And that's the most important for me, because if their numbers keep ticking up at 16 times forward earnings, they're going to get rewarded. The other thing that I'd say as well is when I talk about analysts, guiding wrong, if we go back to the Q4 earnings and we look at the Q1 guide, okay, so previously, Enphase said they were going to be around a 340 to a 380 million in a revenue guidance point of view. okay, the consensus was 340. So they hiked the midpoint up by about 20 million. Yeah. What did the 20 million hike up guide get them when they did this? Well, we just said, like, the share price did nothing. So they weren't rewarded, even though they hiked up in the last quarter. So Enphase guided for 340 to 380 million guide in the last quarter, right? So if we look at the what they delivered, 356 million. So yeah, okay, they were slightly behind the midpoint guidance, and that's why they're saying they missed. But realistically, when we look at Enphase's guide, they were pretty near the midpoint of what they were guiding for. It's not like they missed guidance. That's what Enphase said they were going to do. And only 3 months ago, analysts at this point here was expecting Enphase to be doing, what would you say, 340 million in revenue? So from where they were 3 months ago, they're now 16 million ahead, and yet, they get no rewards from it. That's why it doesn't matter about the short term at all, And then so if maybe a few people kind of like pointing around to the guidance potentially. They guided 340 to 380 million versus the 377 million consensus. Well, it's still in what they're guiding for. It just depends whether, if they have a good quarter, then maybe they hit this guidance. But it's always better, especially with the time period that we're in for Enphase, with all this tariff news situation. They've also priced in a little bit of a tariff impact at the moment on the gross margin point of view as well. It's probably best that they've kind of gone, yeah, you know what, before what we could see, back when they did the last earnings in February time to where they're at now. Obviously it's like a point of view where they're like, you know what, yeah, let's be a little bit conservative. We're going to, your midpoint previously was 377 million. We're just going to pull it back a little bit and manage those expectations. Nothing wrong with that. That's what good businesses do. Just manage the expectations a little bit, especially what's going on at the moment. So I have no issue with that because, you look at the numbers there and it's still very much in the range, and hopefully, the sandbagged it and then they'll be towards the higher end of the guidance. But I just wanted to kind of show you there, like, how pointless. I think I mentioned this on Monday. Like, I don't really care a lot about what analysts are saying. I look at the long-term numbers, and for me, I looked at the long-term numbers, and they were all ticking up in the right direction for coming at 16 times earnings today for me. Anyway, next one, final one, last one. One of my favourite UK stocks, not talked about for a long time. Hollywood Bowl, up 3.2% today. And, I forgot about it. I forgot about this stock a little bit because I've been talking so much about Card Factory, Gaming Realms, B&M, JD Sports. That this was one of my old stocks that I've held for a long time and made good money off it. And I've just left it there. It's a stock that I can really just leave there to do its own thing. And maybe that I've kind of neglected it a little bit because, obviously right now, a lovely 4.3% dividend yield. And I looked and I thought, okay, if they do this year's numbers, Hollywood Bowl is actually down at like 11 times earnings, which for a company like Hollywood Bowl levels, good, 11 times earnings. This is one of the best well-run UK companies out there. And I would say this normally should trade at somewhere between 16 to 20 times earnings. So big disconnect to what it should normally trade at. And they came out with an update today, and the update was actually really impressive. I've not actually I forgot to load it up for you guys. Apologies for that. So just bear with me while I load it up for you. But they came out with an update today, and absolutely fantastic. And I thought, you know what, for 11 times earnings here, I probably should buy more. UK revenue is up 4.7%. That's pretty good for what's coming quite a mature area for them. It's still very good growth. UK like for like still up 1.3%. Obviously with the bowling alleys, which is probably the most important to say, is up 1.5%. And I remember another UK content creator. I won't say who. I remember they were viewing it and they were saying like, where's the growth going to come from? And for the last few quarters, it's been clear like the Canada expansion is now the growth driver for them. If the UK grows at like 4% a year, the Canada expansion carries on doing what they're doing at the moment. Very quickly, like the Canada is going to drag that up to like mid-high single digits. And that's where the growth is, the Canada expansion. And once again, the Canada numbers coming in strong. Like for like total revenue up 13%, as you can see here. And the like up 3.7% on a constant currency basis as well. And that was even with a negative impact because of the timing of Easter as well. So yeah, you know, if they keep doing that growth that they're doing from the UK, adding that candidate on top, goes to the bottom line, as we're kind of seeing at the moment with this business. You pick up a 4% dividend yield at the moment, which is nice. 11 times earnings, should be trading a lot higher. Very quickly, this has come like, you know, one that I've kind of disowned a little bit at the moment. And I was looking at it today and I thought, I should be a lot more active on this one. You know, this is one of the best well-run UK businesses here with the exciting candidate launch. And it's actually quite cheap from what it normally trades at. So kind of slipped my mind a little bit there, but I thought I'd shout that one out to you because it's one that I've done very well on and kind of not really talked about it. And I thought, you know what, give it some love today. And yeah, interesting. So yeah, hope you enjoyed the video. Obviously, a few stocks there. Let me know what your thoughts are. What do you think about Tesla? Do you think it's as bad as what it looks? What's your thoughts on Enphase's earnings? And are you tempted by Hollywood Bowl? Hope you enjoyed the video, guys. See you in a bit.